Futures are up this morning after the Federal Reserve raised interest rates by another 75 basis points this week to, at the high end, 4%. We're waiting on the October jobs report at 8:30 a.m. Eastern time. Economists expecting 200,000 jobs were created in this country last month, with the unemployment rate ticking up to 3.6%. Joining me now, Markowski Investments President and watchdog on Wall Street radio host, Chris Markowski. Chris, what are you expecting? Because the Federal Reserve is raising interest rates. One of the critical reasons that it continues to do that is because the labor market is so tight. But at the same time, we have slowing job growth, the slowest it's expected to be since the end of 2020. And you have a lot of companies that are stepping up, not only freezing hiring like Amazon and Apple, but cutting jobs. Lyft and Stripe, to name two from yesterday. How do you see it?
Well, I think it's necessary, Dagan. We obviously saw way too much hiring happening in the tech sector, and I think Silicon Valley needs a bit of a flush out. And it was kind of interesting even seeing what's happening with Twitter right now, and they're actually filed a lawsuit trying to stop some of the layoffs. These things are necessary. But I don't know about you. You know, you're out and about, and I go to various different places, and I still see the help wanted signs. I was taking a look at the small business report yesterday. As job growth has slowed, still, small businesses are still looking to hire at a pace that's almost double the 40-year average.
Right. Their businesses are having difficulty finding workers. And we found out before the Fed decision that job openings rose 437,000 in the most recent report, the JOLTS report, to 10.7 million job openings.
Well, yeah, there's almost two. It's 1.9 job openings for every one person looking for work. And it's still amazing. We're still getting the lingering effects of all the handouts and the giveaways and things that we warned about back in COVID, where you're paying people not to work. 100 million people in this country not working right now. You got to think about that and put that in the proper perspective. It's almost a third of the country. Now, granted, you got a lot of people that retired, maybe did even a little bit earlier retirement during COVID, but there's still a lot of people that we've got to get back into the workforce.
And Dave Nelson, Chris just mentioned this, that Elon Musk is now facing a lawsuit after announcing plans to lay off about 3,000 workers at Twitter. The lawsuit accuses Musk of violating California law that it requires businesses with 100 employees or more to give 60 days notice of mass layoffs or other work disruptions. Employees will find out if they have a job or not today at noon Eastern, so Pacific time. The layoff announcement planned for 9 a.m. Pacific. Dave Nelson, jump in here.
Yeah, I can't speak to the law on this and whether or not they have a valid suit here, but the purge is necessary. And to Chris's point, we're seeing this across the entire technology sector, and it begs a question for me. What is it telling us? That the low end of the economy, that the service sector, that we just can't get people into those jobs. There's obviously a lot more jobs than there are people to fill them at this point, yet the growth engine of our economy right now is starting to falter, and we're starting to have, pretty large layoffs across the entire sector.
Chris?
Well, as far as the layoffs coming in the tech sector, I actually think it's going to be great for those companies moving forward. I think that they way overdid it. There was a scramble to get as many people as possible. We talk about this quiet quitting nonsense. They rephrase things. Back in my day, they called it being a slacker. I'm great with that. You want to get rid of all of your slackers. You want your companies to become more productive and get rid of the dead weight.
Yeah. Broad market with the Federal Reserve. You heard from Jay Powell earlier in the week with short-term interest rates, the Fed funds rate now at 4%. And he made it clear, very premature to think about pausing, very premature. He repeated that. If the Fed does too much, it can cut. If it doesn't tighten enough, then you're in real trouble. Where do you think rates go, and how hard are stocks hit because of the Fed's continued aggressiveness?
I'm not a big fan of what they're doing at all, quite frankly. The Federal Reserve they can't drill, they can't frack. We have a problem when it comes to energy, when it comes to supply here in this country, and energy factors into everything. You mentioned in the last segment what you're paying for your electric bill. I found it fascinating. You've got companies now actually in their earnings reports citing the fact that their electric bills are going up. And I think I'm bad yelling at my kids about the thermostat here in the house. You're going to have business owners doing that as well. The Fed can't fix that with this hamster wheel of 75 basis point run-ups. I just think that they've hit a wall, and the exercise of stupidity is doing the same thing over and over again. The Fox Business reporter at the press conference the other day actually asked a great question. Was actually, and I can't, his name eludes me. Actually asked about the fact that, what about government spending? What about all the spending that's coming down in the works? And we're starting to see a bit of a tie-in now where it's not just what the Fed has to do, it's what they're doing in Washington, and they're spending too much.
Yeah, I've said that, you're talking about Ed Lawrence, I've said that all along because once the Fed started tightening earlier this year, and the Fed waited too long and was way behind the 8 ball, but what Washington has done is continued to pump money into the economy. Everything that Biden and company has done is wildly inflationary. Just the moratorium on making student loan payments, just that, which was extended in April through August and then extended again through at least the end of the year. That is money in the hands of everyone with student loans, including rich doctors and lawyers and investment bankers. It's wildly stimulative. So the Federal Reserve's trying to tame inflation while Biden and company are making it worse. And so the Federal Reserve has to use a heavy hand and a blunt instrument. And so you're going to wind up with a much worse recession than need be, to your point. Chris, thank you so much for being here. Chris Markowski.
Pleasure.